Dave Benoit, Deal Journal blogger, and the reason we have Benoit on again today is because obviously it's earnings season, more banks. Banks always report early, so we get all the banks in this first week. So this morning, I'm going to start off with Goldman Sachs because they reported stocks basically flat. I mean, the market didn't really make a lot out of these numbers, did they?
Yeah, it's kind of a mixed story here. Certainly it's down from last year, the profit's down 23%, revenue's down like 16%. So it doesn't look great compared to last year, but like you said, compared to the fourth quarter, it looks pretty strong. And
the trends seem to be continuing. They're saying that their trading business, which is their big business, continues to suffer from weaker demand, and their banking business also seeing weaker demand, which has pretty much been investors' understanding of how Goldman's been doing all year.
Yeah. There's nothing that new and exciting in the financial results. Really, it's certainly it looks a lot better than the fourth quarter. Numbers are up a lot in trading, which is a big help to them. But we're still not seeing this kind of boom time return for Goldman Sachs.
Right now, have we seen enough of these banks, especially the big Wall Street firms, to kind of draw a general picture of what the banking sector looks like right now?
Yeah, I mean, I think it's what George just said. The same that we've seen all year. It's kind of there are pockets of good and pockets of kind of we don't really know what's happening. We don't know what regulation's going to do. We don't know how the Volcker rule is going to change for the future. There's still a lot of kind of question marks over the profitability.
I did love. I want to read this too. This quote from Lloyd Blankfein. I guess it was in the press release. Because client activity remains relatively low in certain areas, especially in parts of investment banking, we believe that our mix of businesses gives the firm significant room for revenue growth as economic and market conditions continue to improve. That's beautiful spin. I mean, that is just great. That is just so perfect, so smooth. Things are looking better. Meanwhile, the bottom line is they're down from a year ago.
Yeah.
That's the bottom line, right? And I think that's kind of it for most of the banks, isn't it?
Yeah, definitely. I think so.
So what will reverse that trend? I mean, do we need, the economic concerns that are affecting the global business don't appear to be going away anytime soon. We seem to be in the same environment for the foreseeable future. Is there something that these businesses can do to spur trading?
One thing, they've been cutting costs a whole lot. Goldman cut its costs down about, I think, 9% in the quarter, and compensation was down another 8%. So that's definitely going to help them, and that's kind of been the bank's response so far is, all right, well, if we can't bring in the profits, we've got to cut. And so that's certainly going to help, but really they need the economy to turn around, and they need, both confidence in terms of, stock underwriting and deals happening, which just are not happening, and this is where Goldman makes a ton of its money. And then trading-wise, it's, the markets look better, but they're not, perfect right now.
Yeah, I mean, look, I feel like we're sort of dancing around it. I think you just hit on it. It's the economy. It's people's money. And it's this sort of environment where if companies aren't sure what's going on, you said it, they move to the sidelines. That's a big deal. That matters. They'll just wait. They'll just wait it out. They won't do deals. They won't do bond offerings. They'll just wait the whole thing out. That matters. People are spending money, but people are dipping into savings. They're spending money that they don't really have because we all know that wages aren't going anywhere. That's not a good situation healthy. That's not a healthy situation for the long term. And you see all this reflected in these bank earnings. That's what I think.
And this period of uncertainty is likely to continue through the rest of this year because we are in an election year and the uncertainty of how the elections are going to turn out and what that might mean for some big policies like jobs, like health care. We're going to see that uncertainty continue throughout the year.
Yeah, it's going to get more uncertain, certainly in Europe. It's not getting any better. All right, we have to leave it there. We're just about at that really big picture point, too, but we have to leave it. Dave Benoit, thank you very much. Let's get back to the blog.